29.30. What are we gonna get? Look at 30 dropping like crazy. Ooh, that John is taking off without me. Let's see if I get tapped in. Just got tapped in. Timer's on. Stop loss to break even in 30 seconds. That's different. Second trade idea. Last trade. TP1 hit, 3 minutes. Let's go. TP2, live with the gang. What's good, YouTube? Welcome back to the channel. It's your boy Keno Brown, and it's another great day to be great. So we're about to jump on a call with the VIP live session. We don't know what's going to happen today, but you know I'm a disciplined trader, so I'm going to show up and follow my rules and just do what I'm supposed to do every single day. That's all you got to do. Control the controllables. You can't control nothing else besides what you supposed to do. Everything else, you just leave it up to God. Let's get started. I'll take this trade. Looking for TP3 on this one, because the risk is, my stop loss is so damn tight. I'll take this one, 100%. Risking 160, light work. Come on, tap me in.
That was my baby, bro. But shit, that shit toxic as fuck.
Oh yeah, she's toxic.
Don't be moving like a damn independent woman, bro.
Yeah, gold breaks past that 2750.
Just got tapped in. Let's see. We just got tapped in. I'm looking for TP3. Let's see if it's gonna be a fast L or W. Let's put the timer on. Timer's on. Ooh, TP1? TP1 in 5 seconds? Hold on. I'm not even gonna move stops to break even. That was way too quick.
First set in 5 seconds. What are you in short so long?
I'm in longs. That way too quick. Hold on. I want to put my stop loss to break even. Hold on. Stop loss to break even. Jeez. What? Stop loss to break even in 30 seconds. That's different. Stop loss is only 16 points. That's why I'm going for TP3 today. Tight. Yee. Come on. All right. Break even. Ooh. Last trade. She always playing with me, bro. I don't know why.
There we go. We get in a little something.
Oh yeah, TP1. Oh yeah, TP1. TP1 hit, 3 minutes. Let's go.
I'm still waiting.
Stop loss to break even again. Are we gonna get 2 break even trades today? Are we? That would suck. You know what? I'm gonna secure something else. I'm gonna secure a little bit more. I'm gonna take it like down here. That's like $100 or not. Give me a little something to walk away with. It's 14 minutes now, bro. I shouldn't even be here anymore. Why am I still here? Oh, camera's out. Hey, TP2, live with the gang. So, just got off the charts with the VIP, up $300. I forgot how much it is. It's over 300 though. I'm gonna just leave it right here. $300 for the day ski. You know what I mean? Following my rules. Staying disciplined, risk managing properly in front of 100+ people. Listen, I'm only getting better, big dog. You feel me? What is saying? I'm only getting better, big dog. That's all I could really say. Milo, I'm only getting better. Every day, day by day, getting better. Whew. It feels good to know that the hard work you're putting in is starting to work. Oh, it been started to work. It's just continuing to work. You know, journaling. I journaled, followed everything I was supposed to do. As I tell you guys, man, I just want to stay on the right side of this trading thing. I'm doing everything in my ability to be on the right side of this trading thing. I'm controlling all of the controllables, making sure I'm following my processes, staying disciplined to the process, to the course, to the game, for real. I stopped trying to skip steps. I stopped trying to jumped levels. Just take it day by day, one day at a time. We're going to get there. That's it. That's all I try to focus on, taking it one day at a time. Hey, buddy. So, I'm out here just walking this. Come here. Look at him. Look how fast he is. Hey. 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 He's still here. He's still here. He's still here. Hey. 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 Still got my dog. We out here taking a little walk. It's freezing out here. I'm not going to lie to you. I played myself with this attire. Played myself. But when I get back inside, I'm going to bust the breakdown for you guys. I got to, man, I got to put y'all on game. Because why? I love y'all. For real. I got to put y'all on game. So I'm about to finish this walk and then I'm going to bust the breakdown. Let's go. As you guys can see, this is the trade idea. So the first trade I took was an L. Second trade I took was a W. So let me break it down for you, man. I tell people all the time, like when people ask me in the chat, listen, like what my strategy is, how I get in, out. I put everything in these videos. I give my videos my all. Everything that I got, it's here. It's in these videos. I promise you, I don't hold nothing back. So you do want to know how to trade like me. You want to trade like how I trade and execute how I execute. Promise you, these videos cover it all. Anyway, so we start on the 1 hour time frame as usual, as we always do. Start on the 1 hour time frame, right? What am I looking for on the 1 hour time frame? I'm looking for structure. The basis of my strategy is structure. So boom, this is how structure look like. We got high, low, high, low, high, low, high. That's an uptrending structure. So a downtrending structure will look like this. Boom, low, high, low. I'm in lower low, lower high, lower low. Let's make this one probably a different color. Blue or something like that. So this is what structure looks like. So on this side we have a high, higher low, higher high, higher low, higher high, higher low, higher high. On this side, which this is an uptrend, this side we have a low created, lower high, lower low created, lower high, lower low created. That's structure. That's what I'm looking for on the 1 hour time frame, and that's what I want to mark out. So on this chart, so what do we see? It's in an uptrend, right? How do we know it's in an uptrend? Because we first had this low that created a high, that created a low. I say right here, but we're going to go up here, low, create a high, create a new low, create a new high, create a new low, create a new high. So we're in an uptrend. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. We're in an uptrend, right? And I want to mark off my areas of interest on this uptrend. So where would I mark my areas of interest? My areas of interest would be the structure wicks. The highest point the highest point of the structure. But I only want to capture the wicks. So let me bring that chart, the lines back. So you can see this is the highest point right here. You can see this is the highest point right here before it came down and created a low. And then now this is the new highest point. So from here, I want to grab the wick. I'm going to take that off. From here, I want to grab the wick. And I use purple for the 1 hour time frames to illustrate my areas of interest on the 1 hour time frame. So boom, we make this purple. This is a structure high. Then we got a structure low right here. We don't really need to even draw this low because I didn't think price got even down there. But I only want to focus on the major structure highs and lows, the previous major structure highs and lows, the ones that haven't been ran through. So you see this run right here. This was a previous higher low, higher high. Excuse me. This was a previous higher high. But what happened? Price came down and created a low, and then made a new higher high. So this higher high, it doesn't matter to me anymore. Why? Because it's not the most recent one. This is the most recent one. And then what happened down here? We had a low right here created before it created this high. but it created a new low, and then it created a new high. So now this is the new previous low. So I only want to pay attention to the major structure areas, like structure highs and structure lows. And I only want to cover the wicks, the highest point, the highest candle's wicks body from the top of the body to the highest point of the wick. Why do I want to only catch the highest point of the body and the highest point of the wick? Because it shows me that there's players right there. There's a fight that happened. I'm going to explain just a little bit more, but let me just draw this area. See this area right here. This area low right here. There was one here, but I had to go all the way back. So I had to go all the way back over here to draw the structure, because there was no clean structure there was no clean structure for the day. So I had to go all the way back here and grab the structure high from over here. So you can see this dotted line shows where price is located at right now. I have a structure point right here. Let's just put 2 lines so we can get the structure line. Boom, boom. Structure point right there, and a structure point right here. Boom, boom. Let's make sure that's precise. We always want to. Oh, let me get rid of that. We always want to be super accurate when we're drawing these structure, like these areas of interest. Why? Because when price gets to it, that's when we're trying to look for a fight. So if we draw the wrong lines and price gets to it, then that's not really the structure area that we want to pay attention to. So we're essentially could put us in a losing trade because we actually didn't mark up the chart the way we were supposed to. So I always want to make sure I'm very accurate and detailed with the structure areas of interest, because I want to be in, when price gets there, I want to know that I'm actually at that area that I'm supposed to take a trade from. So let's go back to the day, and then I'm gonna draw the purple boxes. That's why I draw 2 lines. You can see I'm gonna make y'all see. So these 2 lines was drawn for this reason, like this, so I could just draw the box in the middle of it. We already know where it's coming from. It's coming from all the way deep left. We're just gonna make the area of interest be shown. Now we have another area of interest up here. Price didn't get up here, so it's not that important, but yeah. So these are all the areas of interest that I seen on a 1 hour time frame. So now let's talk about why I only use the wicks. So from right here, where do I want to start from? Let's probably start from over here. You can see from over here, I did this in another video. In another video, what happened? Price got up here, it created some highs. Let's say I drew the wick, drew the box around this wick right here. When price got back to it, it broke right through it. So now we know who's winning when price gets back here. The buyers. At first, the sellers were winning, because you can see so much wicks on a 1 hour time frame. How much time did it spend here on just the 1 hour charts? Like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 hours in just one area. So you know the sellers were here. They was pushing price back down. Price wanted to go higher. But when price came back here again, who won? The buyers won. So the sellers were winning here. Now price came back over here and it broke right through it. No delay, just broke right through it. So we know now that the buyers now took over this area of interest. Why? Because we can see price just shot up. And now another indicator of why we know buyers took over, because when price got back here, what happened when price got back here? The buyers were here, and what did they do? What did they do when price came here? They pushed price higher because it made a new higher high after it came down here and retested this structure area where the sellers were located. Then the buyers took over, and then the buyers revisited this area where the sellers tried to push it at lower. The buyers stepped in and took it higher. So it's all about knowing your areas of interest and who's winning the fight at what areas of interest. So I usually always have a bias at an area of interest, like down here. Seeing that the buyers took over down here, I want to take buys from down here, right? So up here, when I'm looking at the charts up here, I know up here sellers could be winning. Because why? When price came back here the last time, which is way over there to the left, price sold off. Maybe I'll look on the 4-hour charts and maybe I'll show you guys. Maybe I can see the whole thing on the 4-hour charts. Yes, on the 4-hour chart, you can see when price came back over here the last time, it dropped. Price came here the last time, it dropped. So we had a downtrending the whole time. So sellers were here, they just kept pushing prices lower and lower. So now when price gets back to it in today, what do we expect? We expect the same thing. We expect sellers to step back in. So now let's drop down to the 15-minute time frame, and we're doing exactly the same thing that we just did on the 1-hour time frame. We're doing it on the 15-minute time frame. So the 15-minute time frame, I want to draw out the areas of interest too, right? So how do we know the areas of interest? So we had this high, then we created a low, then we created a new lower high, then we created a new lower low. So where's my structure? My structure is right here for the 15-minute time frame, and I want to make that structure area orange. I want to be very precise with drawing it out. Why? Because when price gets there, I want to know I'm actually in the area of interest that I'm supposed to be in, right? Simple as that. I don't try to make it more complicated than that. Now that we have our areas of interest that we want to play in, so if price gets up here, what I'm looking for, sells. Wait, did I fast forward the charts? I did, probably by accident. Sorry, y'all. But it's the same thing. So when price gets here, oh wow, now it's changed a little bit because we had a little bit of data, but it's the same concept. So when price gets here, what I'm looking for, sells or buys, it just depends. When price get up here, sells. When price get up here, sells. It just depends though. It depends on how price looks like when it gets into the area of interest. If we can see that the buyers are just taking over and they're just going right through the area of interest, and they happen to pull back, like something like this. Price takes off. Boom. It goes to this area of interest. It pulls back into the zone. I'm taking buys from here to take it to the next zone. So this area would have been a now buy instead of a sell, because I seen the buyers took all the way over. Probably puts price all the way up here, and then they pull back here. So I'm looking for the continuation on the buys. But say like price said like this, price went up like that, and then it started struggling here. It probably went up just a little bit high, started struggling, and then we had a close under here. I'm taking it back down to this area of interest. Try to keep it simple, but I'm gonna show you more on the 1-minute time frame. Now let's drop down to the 1-minute time frame. Hopefully my examples are clear. I used an analogy where the boxers in the gym and fighters, all that stuff. I try to simplify it even more from that point of reference, but I do my best to give you guys the value and try to make it connectable and relatable to you so you can understand it on a basic fundamental level. So now we're in this area of interest. We can see that probably from here I would look for sells, but it's not 9:30 yet. So there's only two players in the market. It's two fighters in the market. It's a buyers and there's sellers. There's only ever two players in the markets. You could be a spectator on the side, but once you jump in, you want to jump into a trade. There's only two buttons. You could buy or sell. There's no other buttons here. You could buy or sell. You could buy a limit, sell limit, whatever. Buy market order, sell market order. Buy stop, sell stop. It's still only buy or sell. So let's fast forward a little bit to 9:30. So this is the 9:30 candle right here. So as I was mentioning, price started dropping, right? This is the 9:30 candle. 9:30 candle. Price started dropping. Boom, drop. Boom, drop. Boom, drop. From here, I was like, price got to sell off from here. It might want to pull back. I was not confident in this, so I'm not going to lie to you, but I was so well risk managed, it didn't matter, so I just still pulled the trigger. I wanted price to get here before I really started taking the trade, so I can fairly be honest and say this trade was probably not the cleanest trade that I could have taken, but the risk was managed. That's all I could say. All I ever do is just manage the risk and take the trade. as long as it makes a little bit of sense, as long as it comes in alignment with my strategy, which it did. You can see it started selling off in this area of interest. I wanted to come here. It came so close, but it didn't really get there. I'm going to show you how I got into this trade. So I got into this trade after this last bearish candle almost came down here. I had my stop loss like this. Stop loss under the wick. Entry at the base of the candle. I already seen that price started taking it higher. It already hit TP1 in like seconds. I'm like, all right, if it pulls back, I want to be in it. So how did I get into a trade? I want price to close above the high of the candle. So it closes above the high of the base of the candle, just like how this candle right next to it closed above the high of the base of this candle. Then I'm looking for the retest. Retest of the area, take it higher, just like that. So you'll see right now, that's what it did. And it gave me TP1, so I was able to break even fairly quickly. You can see, boom, price just started taking over, to start bulling. The buyers started stepping in after we had this big bullish engulfing candle, but it reversed. See that? Boom. Look at that. TP3 would have been hit if I just decided to get in right away. But I don't do that. I like to be more conservative, where I can let price come back down, tap me in, and then go back where I want to go. I like for it to prove to me first that it wants to go in that direction. So boom, I got tapped in at 9:39. Really at like the last couple seconds before it turned 9:40. The 9:40 candle, TP1. It was seconds. It was literally seconds. TP1 was hit. Seconds. And then I just moved my stop loss to break even. So at that point, I was risk free. Then I got stopped out break even. I was like, cool. It's cool. I'm going to actually now wait for price to get back to this area of interest, which is the 1 hour area of interest at 44,277, where I'm going to look for a second chance opportunity to take a buy. Why am I so stuck on buys? Or why do I want to continue to look for buys? Because remember, let's go back to the 1 hour time frame. Go back to the 1 hour. Oh, man, it's still squished. Let's go back to the 1 hour time frame. You can see sellers were here, pushed it back down. They created a new low. Then it pushed all the way up. So now when price gets back up here, I know that the buyers stepped in. They took it over. Why? Because price created a new higher high. This was now eliminated. This is not the new high anymore. Down here, at one point, this was the high. But price, the buyers stepped in and said, nope, we're going to create a new high. And it created a new higher high. So now when price gets back to it, I'm thinking the buyers are still going to be in this area of interest. And I want to be able to take advantage of that area of interest when the buyers get back there. So let's drop back down to the 1 minute time frame. I'm going to show you how I got into this trade. So boom. Price finally got back down to the area of interest, right? Finally tapped it. What trade am I looking to take? I'm looking to take price above this last bearish candle that went into the area of interest. This is the last bearish candle that came back down. You can see it came back down. Boom. This area of interest got tapped into. And I'm looking for the close above. Once I get the close above price, like so, boom. I'm looking for the retest. Take it up. Simple. It's not too crazy. Not too crazy. I promise. Not too crazy. So when did we get the punchline? Boom. Right there. That was it. That was the candle that broke the camel's back, or whatever the damn saying is. Just follow me. So my stop loss is under the wick of that candle. I touched that area of interest. How I know that it touched the area of interest? Because I had an alert. So once it touched it, it said ding, and I knew it was time to get in. Although I was paying attention the whole time, I like to put alerts there just to confirm that I'm doing what I'm supposed to do. So you can see price finally closed above with a bullish engulfing candle. You can see this strong bullish candle. All I'm waiting for now is the retest of the area. We're going to see with the next candle. We got the retest. I'm in. Now I'm looking for TP2. So the first candle I got tapped back in, 9:59, 9:51. So by 9:54, I was stopped. I was at break even. TP1 already hit 9:54. Solid day. 3 minutes to hit TP1 break even. So I got break even on the first trade, and this one is already at break even within 3 minutes. But the TP2 took a little bit longer. So 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 was the last candle. No, it was 15. Oh, it took like 14 minutes and 30 seconds or something like that for it to hit finally TP2. But solid day, 14 minutes to make 300 and let me pull up the. So this is my Express account with Top Step that I made multiple payouts from. $342 for the day. You know, as usual, I say no cap in my rap because I do not cap. Right there, you can see it. $342 on the Express account. You know, I can't be more transparent than that, honestly. And I showed you guys the whole thing. I don't hide anything from you guys. I give you guys the whole sauce packet. So tap in. Till next time, man. That's my video. Peace.